Welcome to my channel. As a cognitive behavioral therapist by background and a trader, I'm going to explain how the way you think is causing you inconsistent results in your trading. So, this is the cognitive triangle, and it's so important to be aware of this model because how we think influences every decision we make on the charts. So, thoughts are that constant chatter that goes through our mind as we go about our day. So, it can be words, it can also be mental pictures as well, so images. And our thoughts can be positive, they might be negative, they might be neutral. But how we think affects the way we feel, which affects the way we behave. So, what we do or don't do. Now, if you are finding that you understand trading, you know how to trade, you have a strategy that resonates with you, that you really want to make work, but you can't seem to get consistent results or profitability, having an understanding of this cognitive model and how you are thinking is influencing your trading decisions is going to be really important. Some people think that like the psychology side is something extra, but it's really not. It's actually part of your edge. So, as I mentioned, at its core, how we think affects the way we feel emotionally and physically, which in turn affects the way we act. Okay. And sometimes we can find ourselves in a vicious cycle, an unhelpful loop of inconsistency and not getting what we want out of trading. So, I'm going to go ahead and give you a real example of an unhelpful mental loop that we can find ourselves in. So, it always starts with a trigger, something has happened. So, let's get that down. So we have a trigger. And let's give an example of maybe not following your rules and then you end up taking a loss. Okay. And this is like your third loss in a row, for example. So we have a trigger, and then that trigger leads to a thought. So the typical thought could be, oh, let me try and get this down. So the thought is, another loss. I can't do this. I'm never going to be able to make money trading. Okay. So another loss, I can't do this. I'm never going to be able to make money trading. Now, that thought leads to feelings of frustration, shame, doubt, and then those thoughts and feelings then influence what you do or don't do. And in this example, it might lead to you revenge trading. So, trying to make your money back. Okay. And then so say for example you're revenge trading because now you're really trying to make your money back, and then that trade ends up being another loss, and then that reinforces that initial thought of I can't do this. I'm never going to be able to make money this way. And then it becomes this vicious cycle, this mental loop. So you actually know your rules, you understand your strategy, but the way you interpreted the loss has led to feelings of, negative feelings of frustration, shame. And then you take another trade to almost try to make yourself feel better or to make your money back. And then that there's a chance that that's a loss. And then that thought is reinforced. So, what with this understanding, if we know that how we think affects the way we feel and what we do, that means if we can change the way we think, if we can change the way we view triggers, for example, a loss, in a way that is going to be more helpful or conducive of you getting the results you want in trading, then that means that the way we feel and what we do will also shift as well in a more helpful way. So it goes from being a vicious cycle to a more virtuous cycle. And this is possible. We can challenge the way we think because thoughts are not facts. They are not objective truths. They're just mental events, things that pop into our mind automatically. So let's go ahead and take a look now at a more virtuous cycle. So something that might be more helpful. So we'll have the same trigger, which will be maybe not following your rules and taking a loss, because, we are human and we do make mistakes sometimes. Sometimes we can't execute perfectly. I don't care how good you are of a trader you are, we are still human first, so we will make mistakes. So let's go ahead now and look at a more helpful way of interpreting this. Okay, so now we're looking at the more virtuous cycle. So let's say that the trigger is the same. So you didn't follow your rules and you took a loss. Or let's even add to that, that maybe you did follow all of your rules and it was a loss. Okay, so the way that you could view that could be, let's say it's the scenario where you didn't follow your rules and it was a loss. You could say to yourself, you know what, I made a mistake. I am human. And this is feedback, not failure. I will learn from this. Okay. Or let's say it's the scenario where you took a loss despite following all of your rules. In that scenario, you could say to yourself, this is a probability based loss. Wins and losses are part of the game. And I'm still profitable. It's the idea that your goal is not to win every trade. Your goal is to be profitable, because sometimes that can be unhelpful as well. Trying to have a winning trade all of the time, that can lead to you taking small wins and making small amounts of money. And then when you take a loss, that can wipe out all of those small wins. So the goal is profitability, not winning every trade. And if you have a proven strategy that works over time, then this is what you want to tell yourself. Oh, it's just a probability based loss, it's part of the game. And if you view the loss in that way, you can imagine that how you feel is going to be slightly different to how you viewed it before. So the previous thought was, I can't do this. I'm never going to be able to make money this way. And it led to feelings of frustration, shame, and doubt. Now, let's let's be real. When you take a loss, you're not like hunky dory and happy. But so there might still be a level of disappointment, but that feeling might not be as intense as that frustration or that shame. So it might just be slight disappointment. But overall, you're quite steady in how you're feeling in that moment. You're not sort of spiraling, and you're not about to go on tilt. And that leads to this behavior component. If you feel a slight level of disappointment, but you realize you either made a mistake or maybe it's just a probability based loss, what that means is that you just perhaps journal the entry, journal the trade. It leads to you protecting your capital. And maybe you might walk away for the day, get on with your day if that's in your plan, or you might maybe wait for a setup that aligns with your strategy. It really depends on you. But again, this model really unpacks those moments where we feel a sense of urgency to jump into a trade, or we feel sad or shame when we take a loss. When we unpack what's going on in that moment in this way, dissecting, what's going through my mind, because often, of course, we're more aware of our actions. So we are more aware that we have revenge traded. As well as how we're feeling, we often know how we're feeling because those emotions are intense, whether it's rage, anger, sadness, hesitation, urgency. But we never go deeper sometimes to ask ourselves, what's going through my mind to cause this feeling, to cause me acting out in this way? Okay. So we are going from the whole vicious cycle and inconsistency to a more virtuous cycle, thinking in a way that leads to profitability. We can't control the market. We never know how the market is going to react, but we can control and move towards controlling ourselves and our mind. Okay. So I would like to challenge you to start to become aware of how you're thinking in these moments, even if you're just to keep this triangle in your mind. And whenever you notice an emotionally charged moment, to just make a note of what happened, what was the trigger, how did I feel, what was I thinking, what could have been going through my mind, and then really begin to try to challenge that. Challenge it in a way that might be more helpful for you, more productive, just to make a note of these things and start to record patterns. When you are aware of your patterns, that's where things can change. If you are interested in building psychological awareness and gaining that psychological edge, which is essential, is part of your edge, go ahead and download my free guide, which is in the description below, which talks about the common psychological mistakes that traders make, the psychology behind why we do it, as well as the immediate fix for it. And if you like this content, please subscribe for more. I will be posting weekly videos giving you psychological insights to help you with your trading and to get to profitability.